Hello, in this lecture we will complete the comprehensive problem by completing the closing process. So up until this point we have done the adjusting journal entries. These are the transactions that happened during the month. We did it in form of a journal entry. We then posted it to the general ledger, and then that created the trial balance here. Of course, that was all through the month of May, recording the transactions. Then we then did the adjusting process over here. So we took the unadjusted trial balance from the prior tab. We then made adjustments to it so that we had an adjusted trial balance that we could use to make the financial statements with, because it was on an accrual basis at that point. Then we took that adjusted trial balance and created the financial statement. So here's that old adjusted trial balance. Here's the financial statements in the form of balance sheet, income statement, statement of owner's equity. Now this month we're assuming May has closed now, and we want to think about the idea that these accounts that are temporary, being the income statement and draws, need to be closed out, start over, so that we can then move into the next month and record the activity for the next month. So we're going to go to the closing tab. Here's the closing tab, and we have our same information. We have the adjusted trial balance on this side. That's where we're going to start. And we're going to post our adjustments, in this case our closing adjustments, until we get to the closing trial balance. What's our goal for the closing trial balance? It will be that the temporary accounts, being the income statement and the draws, need to go to zero basically. And why would that be the case? Well, if we think about income, when you say how much does someone earn, you basically have to say what time frame are you talking about. So if I ask you how much money do you make, you have to assume, well, what do you mean a year? Do you mean a month? Do you mean an hour? And that is the same for this income, which was earned last month. And if we want to see how much we're going to earn this month, then we need to make that go back to zero and start at the beginning of the month and count up from there. So in theory, we're going to do that by closing these out. Where are we going to put it? Ultimately in the capital account. So you can think of the end process of this full process as basically making all this account one number, which is going to be 14,640, and putting it into the capital account, so that basically all the blue numbers will be one number, and that will be 56,940, which, by the way, if we go back to the trial balance on the financial statements, I should say, that will be this 56,940, the ending capital account. That will be this 56,940. So we're going to create basically a trial balance that only has the balance sheet accounts in it. All right, so we're going to post these journal entries. They're all going to be as of the end of the month, 5/31. Now, obviously, we're going to do this sometime after the end of the month, but we want to post them as of the end of the month, because clearly it is sometime in June right now, because we had to close out all the journal entries, we had to make the financial statements and whatnot, and now we're doing the closing process at this time. You'll also note that we made this new account called an income summary account. We're going to use that account and close this out in basically a 4-step process for a couple reasons. One, it might be easier to see the processes. It'll make those journal entries shorter, and it'll give us kind of a check figure to see if it's correct before we finish the closing process. So in that process, first we're going to close out the revenue account. And basically what we want to do is make the revenue account zero. So I'm going to make this a little larger here. And so we're going to do whatever we have to do to make that account zero. It's got a credit balance in it of 36,800. How do we make something go down? We do the opposite thing to it as what it is. So that has a credit in it, therefore we're going to debit it to make it go down, because that's the opposite thing to it as what it is. Hello, in this lecture we're going to take a look at the last piece of our comprehensive problem, and that will be the closing process. So let's go over what we have done so far, and then we can just start here at the closing process and finish this out. So we started off entering the journal entries. These are going to be the normal transactions, and we entered all the normal transactions for the month. We posted those journal entries to the general ledger. The general ledger created the trial balance. That trial balance is the unadjusted trial balance. We then took that unadjusted trial balance, went to the adjusting tab over here, used those same numbers in order to create the unadjusted trial balance. We then made our period end adjustments, which are all as of the end of the month, in this case 5/31. And we adjusted those in the adjusted column to come up with our adjusted trial balance. Why? because we wanted to be on a perfect accrual basis and have an adjusted trial balance on a perfect accrual basis, or as close to it as possible, in order to use that to make our financial statements. So now we're going to take this adjusted trial balance, and we took that and we made the financial statements from them. So here are the same numbers, the adjusted trial balance. We rearranged those debits and credits in order of the balance sheet, the income statement, and the statement of owner's equity. So now we have completed our financial statements, and now we want to close out our temporary accounts so that we can start up the new time period. And that's where we are at now. We're on the closing process. So here's our adjusted trial balance. And basically now we're saying, hey, the last month is over, May's over. We need to set up the system so that June can now run the race and start over. Now, when we think about the closing process, we can think of these accounts are permanent accounts up here. So the balance sheet accounts, for the most part, all permanent accounts, they're all going to stay there because they're as of a point in time. But all these accounts down here are temporary accounts. And you can think of them as something like if you were going to run a race, then obviously the time clock goes up, 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 up until the race is over, and then you need to make the time clock go down to 0 again. Well, that's what happened here. We're counting income, we're counting expenses, they go up, 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 and now the month is over. We want to start the month of June beginning. We can't have the same clock running from the last time period. It's a temporary account. We need to reset it back to 0 so that we can start from 0 up in the next time period. So in essence, all we're going to do is we're going to take all these numbers here and make them one number. That's why this blue account's one number. We've already done it up here. If I highlight this, summing it all up, that's what we're going to end up with. So this capital account, if I highlight all this, is going to be 56,940 at the end of the day. And these counts all will be 0 so that we can start the new month. Okay, so you'll also note that there's this new account called Income Summary Account. That account is a temporary account. We're going to close the information into this account. We're going to use a 4-step process to do that for a few reasons. One, it might simplify the process a bit. 2, it'll give us kind of a check figure to see before we finalize the closing process. Therefore, this account will have 0 before we start. It'll have 0 after we're done. If there's something in the income summary account when we are done, we did something wrong and need to check it out. Okay, first step of the 4-step process is going to be as of May 31st. These transactions will always be as of May 31st. Of course, the actual date is sometime in June, but we're going to record the closing as of the end of the month, which is May 31st. Okay, so then first step of the 4-step process is we're going to take the revenue account. We need to make that 0. We need to make it go down to 0. So, and you might be asking, again, why are we doing that? Because in the past I said that revenue only goes up, and it does, and this is kind of the exception that revenues go up. And really, it's not really an exception. It's kind of like we're running the race and the race is over now, so we need to clear off the odometer again and run the race again. So that's what we're doing. We're making it go down to 0 so that we can run the new race, and then it'll always go up again. So we have a credit balance. We need to make it go down by doing the opposite thing to it, which in this case would be a debit. So I'm going to copy that. We're going to put that right on top in C5 right here, and it's going to be a debit. Right click and paste it 1, 2, 3, just the values. If you paste over here, it'll paste the format. We just want the values. The amount will be this 36,800 because that is what's in there. That's what we need to make it go to 0. In this case, we're going to only have one other account, which will be a credit. So I'm going to put that in there. Negative 36,800. I'm going to put it in the credit column, but more importantly, represent it with brackets and credits for the purposes of this Excel worksheet. And that amount is going to go into our new account, this income summary. So we're closing the income into the income summary. I'm going to copy that, right click, copy. Going to put that in C6, right click, and paste it 1, 2, 3. All right, so then let's post this out and see if it does what we want it to do. What do we want it to do? Have the revenue account go to 0. All right, so we're going to put our cursor in I-18 equals, and then I'm just going to point to that. I'm going to post this into that middle column. And once we hit enter, let's see what happens. Takes this down to 0, puts us out of balance. Now we'll post the other side of it into the income summary in I-17 equals, and I'm going to point to this income summary. It's going to take us from 0 up to the 36. So now we've closed out this number, which we wanted to do, and we just dumped it in the income summary just for a holding account as of now. So next transaction will be as of 5/31 as well, of course. And now we need to close out the expense accounts. Note that all the other accounts are expense accounts. So expense accounts, there's usually a lot of them, but they